tell you a little bit about the protocol. We'll probably have you on mute. Anything else, Helen, of how we want to run this?
Yeah, I think just to avoid feedback, we'll put everybody on mute. But there is a chat box. If you go to the bottom of your screen, you'll see the chat box, and feel free to just put all your questions in there, and we'll, throw it out to the, at the appropriate time to get them answered.
Great. So, just generally, we don't have a formal agenda, but what we want to cover is we'll give you a sense of what we are seeing in the market. Then we want to kind of go over to Sunny Hong from Citizens Bank, who is an amazing lender. If any of you have worked with him, he is one of the hardest working mortgage workers I know, and I don't know when he sleeps, but it's great to have you on, Sunny. We also have Seth and John, another really crazy hardworking attorneys. The number of emails I've gotten from John from all hours, I don't know when he sleeps or does he. But Seth and John are also here. We do a lot of transaction with them to give you a perspective of what are we seeing on contracts, how are we getting deals done. We also have Kyle Shepard, who's an insurance provider, who can give you a sense of what's going on in the insurance premiums. We also have Tim Anderson, who is a home inspector, who can give you a sense of how are we dealing with some of the physical elements of a transaction and doing it virtually. We also have John Diakonos, who's JR, we call him JR. JR manages quite a few properties in Brooklyn and Manhattan, and a few in Manhattan, and so he can give you a sense of what's going on from a property management perspective. So we've got a good crew here. Let me just start off by, stating the obvious. The key question we hear is, are we going to see another housing market crash? We've actually been there in 2008, so we knew what happened post-Lehman crash, and I can tell you that this is different. This is the root causes of this is quite different. We don't have to argue the fact that we are in a recession. Q1 negative growth factor data came out today, and we can obviously expect Q2 to actually have further negative growth. So we are in a recession. That is what it is. But it is what it is. But does that mean, one of the questions we got from some of our folks on this call is that how is New York real estate relative to the rest of the U.S. economy and the U.S. real estate? And I think, as we know, New York real estate is just nothing like any other metro real estate, and it still proves to be the same. Some of the key takeaways we're seeing is that for the first time ever, I think we're seeing an inflection point in New York real estate. We're seeing a rapid digitization to a lot of the clunky processes that we're well known of. We're doing closings virtually. We are starting to do inspections through drive-bys. So we're now hosting this virtually. So there is a lot. One of the positive is that there is some digitization of processes that actually have for a while been very clunky and very much paper-driven. The other key takeaway is intensive incentives. We are seeing incentives from every angle to bring in buyers and sellers to actually transact. And believe it or not, everything that can be negotiated is being negotiated. It's not just a price. There's so many terms, and Seth and John can talk more about it. In terms of price negotiability, I'm going to defer to Helen to talk a little bit more about what we are seeing tangibly from some of our deals, but it really is a case-by-case basis. It's not there's a 20%, 15% decline. It really isn't. It really is back to the basic fundamentals of real estate, which is what is the asking price, what's the inventory, what's the supply and demand, and what's the competition. We actually launched a property literally a day or a week before shelter in place that got 3 offers and got into bidding war, and Helen can talk more about it. So I'm going to kind of defer to Helen to tell you a little bit more about what we have seen in the deals we've done in the last 45 days. And the last thing I want to mention is that as we enter into summer, the seasonal buying, renting, what happens typically in New York, that's out the window. The seasonal cycles we don't see that happening this year because of the nature of the current marketplace, because spring listing season hasn't even taken off. So Helen, do you want to share with everyone what we have seen in the 4 or 5 deals we've done in the last 40 days?
Sure, sure. So actually, we've been actively closing like one a week since we've gone into lockdown. But what Rezwan was talking about with regards to price negotiability of all these deals, really only one of these deals had some, so I guess, fairly substantial discounts in there. And even then, it was maybe a 3% discount. And that really was because of when it landed. It landed literally right at the shutdown or, the pause. And, that really caused some confusion. And there we had to, in order to move it forward, the seller agreed to a 3-4% discount there. And that seems to be about I would say, the greatest when we talk about discounts, you can kind of break them up from 1% to 4%. I would say about 30% of our deals at Compass, based on some polling we've done within the company. About 30% of deals are going at about 1 to 3% discount, 4% discount. But there's also a good 30% that are not discounting at all, and that would be kind of more indicative of the other deals that we've had. That we closed on. Now with those deals, there were no price renegotiations. However, there was some give and take on other terms of the transaction. For example, there was one where we had to agree, where we were able to get the seller to agree to a post-possession because move-ins and move-outs were not allowed in the building. So we were able to close at the scheduled time. However, we were able to negotiate a post-possession where the seller would have to pay the carrying cost for that period of time where move-ins were not allowed. In another case, we were able to negotiate our closing costs where the seller pays some of the closing costs. So, and yet another deal, we had money in escrow and so there's definitely many ways to negotiate a deal that's not just around pricing, but what it does require is a whole lot of creativity and thinking about the different aspects of the deal and where you can, get some additional value, depending on which side you're on. And of course, the biggest part of this is just simply keeping the communication lines open and just talking it through with either the buyer or the seller, depending on which side you're on.
And this is where it really helps to have partners like good mortgage brokers, lenders, and attorneys. So I think we have two of our favorite partners, Sunny and Seth and John here, who has been instrumental in helping a lot of our clients through. So I want to kind of throw it to you, Sunny. Like, how has the lending landscape changed in the last 2 months or so? What are you seeing?
Yeah, I mean, for us, while it's strange to say because, we're seeing 20 million, people, over 20 million people who filed for unemployment. Yet on the bank end of things, we're probably busier than we've ever been. I can't recall a time where it has been busier than now. And a majority of it is, buyers or owners refinancing their mortgages. So we certainly have seen a decline in purchase volume, and an increase on refinance volume. But we've been busy. As far as how COVID has affected lending, is that the banks are now, they've become a bit more restrictive with guidelines. I mean, I think there's a couple of things that came out on the news recently. I think Chase recently restricted financing to 80%. Wells Fargo came out with no refinances on jumbos. Some of the non-bank lenders are just not doing any jumbo financing. We've certainly made restrictions on our end as well. So we're dealing with some challenges and navigating through helping qualify buyers that were qualified 2 months ago that maybe are not qualified today. So there are challenges in this lending environment today that we haven't seen a couple of months ago.
So, Sunny, a quick question when you were talking about qualifying. Are we talking about in terms of people who are now having to be requalified? Is it because of a decline in assets? Is it because of job loss?
Sure. Yeah, it's a combination of a lot of things. Certainly, buyers that had a job a month ago that are either on furlough now or maybe even lost their job. they were approved a month ago, but now without a job, we can't approve them anymore. And we're doing employment verifications even up till the day of closing. So the banks just want to make sure that, the people that we're lending money to can repay their mortgage. Assets as well. We're not counting stock and retirement accounts the same anymore. Although the market's back up a little bit right now, I mean, we are aware and cognizant of the volatility. So, it can certainly drop at any point at this time. So we want to just be cognizant of that. We want to make sure that people have liquid funds when they're purchasing.
In terms of like guidelines that are changing, are there changes to minimum required down payments or credit scores?
Sure.
And in general, how is as far as processing time, underwriting time, how is all that being impacted?
Yeah, as far as guideline changes, I think most banks are considering, this to be a soft market right now. They're not expecting prices to sustain. So a lot of banks are starting to cut down on loan to values, meaning they're going to require buyers to put more money down. While we specifically haven't made any changes at Citizens Bank and we're still doing 90% financing today, that can certainly easily change, next week or even tomorrow. But we are starting to see that across some of the major lenders. Credit score requirements are certainly going up on different products. As far as processing and underwriting goes, we're in a business where everybody is able to work remotely. So, it's almost business as usual on that end, just with double the volume of business we're dealing with the refinances.
So we have a question from the audience. With refinances, has the process changed or the guidelines changed or?
Yeah, I think it has changed, based on everything I just described about, more, they want more equity in the home, they want higher credit scores. Their underwriting has become a bit more stringent than it was a couple of months ago. Other than that, appraisals. I mean, appraisals have been, I think one of the biggest changes because a lot of people don't want an appraiser in their homes. We are doing appraisals on a lot of the cases, and we do require it, unfortunately, in many of the cases. I'm finding that appraisers are not spending more than 2 minutes in the home. I mean, they're literally coming in, taking a few pictures, and out of there with a mask and glove. So we are able to get away with some drive-by appraisals, but in many cases, we're still doing appraisals.
Got it. So the desktop appraisals, like drive-bys, they're happening. So you're actually able to get an appraisal value from those. But how do you deal with valuations when, are we looking at, is there a COVID factor in valuating? Are you looking at a different time frame? Or are you looking at last 3 months and 6 months of comparables?
Yeah, that's a great question. I mean, we're not seeing many issues on value today because they are looking back in the last 6 months. I think we're certainly going to have challenges in the 6 months ahead, but they are looking at comparables for units that closed in January, February, and March, and these are probably contracts that were signed, earlier this year or last year.
Got it. Any thoughts on rates? I know you can never predict rates, but what do you sense or see over the next year or by the end of the year?
Yeah, I think rates are just going to remain low. We're going to see volatility on the low end of things, but it's still going to remain relatively low. I mean, you can still get low 30-year fixed on a purchase loan right now, and I think it'll be up and down in eighths on any given day, but I think it'll be relatively low. The Fed's pumping money into the market to continue banks to help banks continue to lend, and I think we're going to continue to see that throughout the end of the year.
Kyle, I'm going to ping you a little bit because we had an earlier conversation this morning. You were saying that you think insurance premiums are going to go up. Can you kind of enlighten us on why you see that happening? And if there's difference between condos, not co-ops, condos and multifamily or single houses, do you see differences in product categories where you see the premiums may go up?
Not in to answer the last part of your question, I don't think that's going to be a big differential as far as premiums going up. I think it's just a reflection of the setback in the market that the insurance companies and reinsurance companies have taken, which is going to establish kind of a new issue for the insurance companies in that they're going to need more money to effectively pay down claims, most likely a lot of claims on the commercial side from COVID. And, you know, whether or not your carrier for your personal property writes commercial business, they're going to need money to pay down claims for that. And it's going to affect long-term lending rates, as Sonny was saying, because, you know, the lending on claims from reinsurance companies to insurance companies is just going to be more expensive, which is then effectively therefore passed through to the clients. So I think in a micro view, you won't see anything drastic right away. But in my anticipation, I think over the next 2 to 5 years, unless the market rebounds drastically, I think you'll see higher insurance premiums year over year just to effectively put back in place the companies where they were before this all happened.
Got it. John and Seth, I mean, how are these getting factored into your contracts? Not only the new contracts you're writing, but also existing contracts. I mean, how are you accommodating all this? I mean, we've had a few that had quite a few wrinkles. Do you want to share a little bit on what's keeping you up at night?
Well, there's so many factors that have been weighing into these contracts, but I guess to start, we have to go pre-COVID contracts, and when nobody really expected any kind of shutdown, there was really no, in New York State contracts, there was no standard force majeure. What happens if there's a global pandemic? It just wasn't covered in the contracts. You know, what happens if this takes place for the buyer or the seller? There was no in or out or renegotiation or cancellation. Obviously, once all of the attorneys got wind of the fact that there was going to be a shutdown, the New York State was shutting down, we all started working on riders, and we all have our own riders, and there's some standard riders now issued by the New York State Real Estate Board, just protecting people, giving a 120-day out in the event that the lender has an issue with the COVID requirements or the social distancing or unable to close, that, you know, either party can cancel, or if the lender has an issue with something having to do with a COVID result as with respect to a purchaser, that the buyer can get out. But we do have some really good provisions now for deals that entered into contract before we had an idea, say like in February or January, which are still trying to close. When the buyers want out, it's really just a case-by-case basis of if the seller wants out too, then great, we can work something out. If the seller wants to negotiate, then we can negotiate. But a lot of times we're just in the habit of telling the buyers that once the social distancing wears off, they're going to have to close eventually.
Are you
we've spoken about it also. It's hard. I think when it first hit and everybody had to start staying home, the knee-jerk reaction seemingly from most of the industry was to give overly broad protections to the buyer. In my opinion, it was, if you have a mortgage contingency, but you also had a provision added to the contract or rider that said, if the buyer loses their job after they get their commitment, a reduction in employment, or, stubs a toe because of coronavirus and they need to cancel the contract, the buyer basically had an unlimited right to get out of the contract from the time of signing till the point of actually closing, which has never been the case in New York. I think the important thing to note is, contracts have always been, even when you have a mortgage contingency, which was pretty much the most you would get, the contract was only contingent on getting a commitment letter from the lender, not necessarily being 100% clear to close and closing. It was the buyer's responsibility to maintain their financial standing, their credit, their employment between the time they got a commitment and when they closed. When everybody started staying home, again, like I said, the knee jerk was sort of just give the buyer all the rights. And, if anything happens, the buyer needs to be able to cancel and get their deposit back. As we've gone further into this, and with the attorneys that are paying attention, we're trying to come up with a little bit more fair and balanced provisions, because, especially if you're a seller on here, you don't want a buyer to just have a right out and be in contract for 4 months and just have the right to get out because they say, well, my employer reduced my salary by 5%, so I need to get my contract, I need to get my deposit back and walk away. The sellers are living in the middle of the pandemic as well. Sellers are making plans as a result of signed contracts. Sellers are making financial decisions as a result of getting into contracts. So I think, the rational and reasonable people among us are trying to come up with things that are a little bit more fair and balanced for everybody, because it's not just the buyer that's in a transaction.
And how are you closing virtually? I mean, closing used to be a very physical process. We've done a few together. So can you share with some of our folks, like how are you doing and and what's involved? And are we seeing delays or how are you dealing with it?
I think the first thing is praying that everybody involved is good at what they do and proactive and organized. I think you mentioned it earlier as, one of the things with New York has always been, we've known for, there's a part, you have to get your inspection done. You have to show up to the closing and so many people at the closing, the seller, the seller's attorney, the buyer's attorney, the bank's attorney, the representative from the title company, the brokers. I mean, you've got a party. I don't know if we'll be allowed to have that many people for quite some time.
Right.
But we have been able to get closings done. I think one of the misconceptions, I had a loan officer email me recently because their bank does not allow quote unquote virtual closings by the executive order. And they got the customer survey satisfaction filled out and the buyer wrote, closing went great, really happy with everybody. The virtual closing was awesome. We were like, oh God, no, they didn't actually write that. What we've been doing a lot is trying to get power of attorneys from our clients, buyers or sellers. Make sure the power is specifically limited to just the transaction, nothing else. That's how it always is. So that right there automatically you're already bringing down the number of people that need to participate in the final closing. And then we've also set up in our office, whether we're representing a buyer or a seller or we're just representing the lender, we've prepared pretty detailed escrow agreements, which lay out every party's responsibilities, tasks, where the money is supposed to go. And this allows people to sort of stay in their homes and get the closing done. So if you have a buyer and they have financing, if the bank doesn't allow the notary to notarize on the basis of a video call, the bank attorney or our office will send somebody to their home. What we've been doing to maintain social distance, we tell them right off the bat, all of the loan documents, everything you need to sign is going to be in an envelope. The closer is going to come to your house. You're going to meet them downstairs at the car. They're going to pass the documents to you through the car window, go back up to your home. We're going to hop on a video call. We're going to sign everything except for the documents that have to be notarized. There's usually only about 7 to 10, maybe 12 documents on a purchase that need to be notarized. So for the banks that don't allow the notarization on the video call, we just tell them, come back down to the car when you're done with the video call. The closer will explain what you're signing. Just don't sign those last documents until you're standing outside the car and the notary can physically see you with their own eyes as opposed to over the phone call. Sign the documents, put everything back in the envelope, pass it to the closer. That gets the buyer signing all of their documents. On the seller end, again, either power of attorney or pre-signing everything. So you're signing the deed, the transfer tax documents, the affidavits, getting everything to the title company in advance. And to avoid having to go to banks and get bank checks, we're really trying to do everything by wire. So, it's not 100% virtual. It's not digital signature like some states in the country allow, but it's allowing people to stay in their homes, making sure you can coordinate a wire with your bank. Some banks do require that you have to go to the bank to order the wire. A lot of them are making exceptions, but that's bank to bank. So, the buyers will have to check to make sure that they can get funds to their attorney, get funds to the bank attorney. But that's how we've been doing it virtually, and at least keeping good social distance if it can't be 100% virtual.
What about co-op deals? Working with a co-op management company. And JR, I don't know if you can.
I spoke too much. I'm going to let Seth take that one. I don't want to touch it.
That's exciting.
It's funny. It's funny you say that, and I know why John doesn't want to field that one. Escrow closings, all the closings we're doing are so cookie cutter when it comes to now doing a remote closing with a house or a condominium. Super easy. When it comes to a co-op, you're adding into that the management company, sometimes a transfer agent and a management company. But basically the person who's going to handle the transfer, taking the old stock and lease, and issuing a new stock and lease. So we're adding them to the mixture. So it involves usually an escrow with them where they agree to prepare a new stock and lease and send it to somebody, usually the bank attorney or buyer's attorney, or hopefully it's a bank and buyer's attorney if everybody's on the same board together, and sending it to hold an escrow pending the receipt of the original stock and lease from the seller. Now, we add another party. I don't want to confuse anybody any further, but we add another party because there's also usually a seller who has a payoff bank who has the old stock and lease. And in order to get the closing done, we've been calling co-ops our jigsaw puzzles because you really have to piece together a lot of parts. So you need the payoff bank to be on board with giving up their collateral for somebody to hold in escrow before they get paid. Then you need the management company to agree to issue a new stock and lease, which is their only security in the new apartment, before they get paid and the seller gets paid off. So you really need very cooperative, very skilled, and very professional attorneys and people on all sides. But we've done quite a number of co-op closings, and we've gotten them done very successfully. Now, you might want to know what things are not going successfully with co-ops, and there's a lot of them. Number one, some co-op boards aren't meeting or dealing with people. I had that today with a purchaser of mine who tried to submit a board application, and the board told them that they're not processing applications at this time. They're not even thinking about it. And so that spooked my client to the point where now they don't even want to continue in the deal. So I had to bring that to the attention of the seller's attorney and let them know that I have a buyer who wants out of the deal. And under co-op contracts, if the board hasn't made their decision by a certain period of time, the buyer or seller can cancel the contract. So boards are opening themselves up now to some liability with buyers and sellers and not making decisions in a timely fashion because of the COVID crisis. But sorry, I was digressing. I know that wasn't what you were asking about.
But I think it's a relevant question, and I want to throw it to Sunny. So in situations like that, when the timeline gets extended, what happens with the rate locks, and how are you dealing it from the lending side?
Yeah, so far we've been offering free rate locks. It's kind of been unlimited at this point. We would just have to document it and say, due to COVID, we need to extend the rate, and it's been a non-issue so far.
And is that you, Citizens Bank, or do you think that cuts across other lenders as well? Like everyone's adopting that?
Yeah, I think everybody is adopting it. I can't say, it's universal, but I think most lenders are adopting that, and they are extending it when they need to be.
We represent a couple, and we're seeing that also for the most part. They're not all extending out the commitments necessarily, which is different than the rate locks, but the rate locks, they're, if the parties had made a good faith effort and can't close, they're seemingly been pretty flexible with extending out rates. The commitments, and I mean, Sonny can talk more to that. It's just, when did you give your bank statement? How old is the credit report? How old is the appraisal? I think they've made some exception on that, right, Sonny? But certain things they still want to see, bank statements,
right?
Pay stubs.
Exactly. Yeah, they do still want to see updated bank statements and pay stubs, and the commitment still needs to be extended, which is not affected by the rate expiration dates.
Got it. JR, I don't know if you can jump in, if you're able to talk. What are you seeing from a management? I mean, you manage so many buildings and many of them are co-ops. What are you witnessing on your end? Are you able to speak, or you're on the phone, I know? I think JR is, Helen, can we unmute JR? Or?
Actually, I will unmute him, but.
Okay, he may not be able to.
Yeah, there seems to be feedback now.
Okay.
I actually do have a question though for Sonny. Before, when we're talking about commitments and so forth, rates. So Sonny, this is a question from the audience. After the last crisis, non-traditional mortgage products like ARMs became a lot more difficult to get. So is that happening now? Are you doing interest-only loans? Are you doing 30-year fix? Are your loan products now being somewhat restricted?
Yeah, I mean, so far we haven't seen that on the Citizens Bank side yet. So we are still doing 90% financing, including interest-only. I feel like there is a change that's going to come down with that, where we might go from 90 to maybe 85%. Or maybe even 80% financing, but even the mortgage insurance companies have increased their premiums. So while we're doing it today, I do feel like we are going in the direction where we are going to be a bit more conservative with our lending standards.
Makes sense.
Right. I think we have JR on video. JR, can you hear us?
Yeah, I don't see a, maybe JR, perhaps you can chat us, put in a message.
Send us your thoughts and text and we'll convey it to the group. I have a couple of questions, both for John and Seth and also Tim. So for John and Seth, how are you incorporating in your new contracts some of the physical aspects of a transaction? Like how are you incorporating, what are the provisions for an inspection if you can't do one, or walkthroughs, or for surveys? So what are you seeing that's being discussed, or languages that you see other opposing attorneys accepting, or provisions you're making? I know we've done a few where we had to put in some crazy provisions for escrows, etc. So tell us a little bit more about what you're seeing, or what you're doing basically more. And
well, surveys are still being done, but as far as walkthroughs, we haven't put any special provisions about people doing walkthroughs, although we've seen more people using their brokers or using videos for walkthrough and virtual walkthroughs.
One last week, right? So.
Obviously, there's some. It's not a perfect situation, but as long as as long as they can do a walkthrough, we've been having people do walkthroughs. But at this point, we're really closing deals that people want to close, and they're kind of making it happen. We haven't really been on the side where people are forcing deals to close for that situation.
I think also the main things have been really what happens if everybody is impacted by the virus. And it's really more been about, pre-contract, can people do an inspection, especially on houses, very common. Condos and co-ops a little bit less so. We've had it, and I think you've had also, right? There are inspectors now that are able to get in. Everybody's taking, the proper precautions. They're making sure that only one person, only the inspector goes in, not multiple people, sellers letting them in and then just getting out of the way, sort of. So inspections are happening. If they can't, then we'll just discuss with all of the parties, what type of provisions they want to put in. We've tried to, again, a lot of it depends who's on the other side. If the attorneys are reasonable people we know, we've put in that inspections will be completed as soon as the attorneys deem it to be reasonably practical and safe, as soon as New York on pause is over, as soon as the inspectors are allowed to. And sort of just been flexible with that. And we've handled walkthroughs, at this point, most of the coronavirus provisions have had in that if, in the case of a building, so co-op or condo, if the management company or the buildings aren't allowing move-ins or move-outs, that nobody can require the other party to close at that time. And even where we haven't had those provisions in, if someone went into contract just before, we haven't had really much pushback at all from even the most difficult attorneys that we work with, some of whom Seth are dealing with right now, about, making somebody close, if a building isn't allowing it. There's no way that anybody can force somebody to close if a building's not allowing movers in and out and the people can't get access. So that's been pretty easy, even if the provision isn't in the contract.
I have a question regarding, the DOB is pretty backed up now. Do you guys have any thoughts as to how to navigate that? Because, there are properties obviously being, renovated, permits that need to be closed for contracts that, on properties that have open permits. How's all that being handled?
Do work without permits. I was on mute, right? No.
I'll cut that part out.
We'll delete that from our notes to everyone.
Edit the video.
That's a $10,000 fine if you do that, by the way.
Yeah. Don't do work without permits. It was just a joke. Helen was asking about open ones. We've got different information. Tim, you might be able to speak to it too. We've heard, we've had some sponsor deals where, the open permits waiting for a TCO. Some of the developers' attorneys have told us, all of the work's been done, everything was completed, and it's just paperwork, and there are still people processing the paperwork. I have an expediter that we deal with all the time. He told me he's been really busy and he's still filing and getting things done and submitting stuff electronically. I think, Helen, a lot of it depends on the level of the permit too. Most work that can be done that's not an alt type 1, which is the most comprehensive permit, alteration type 2, type 3, and lesser permits have always been able to be self-certified by the professionals, either by the architect or the contractor, electrician, plumber doing the work. I know before the pandemic, DOB had gotten very aggressive about doing quote unquote random audits of self-certifications to ensure that, if a contractor or electrician said, yes, I did the work according to the plans, while it was allowed to be self-certified, DOB said, okay, great, you self-certified, but we're going to come audit and just double check and make sure. I haven't had a definitive answer on that. My guess is that there's probably going to be a good bit less quote unquote random audits at this time until they can get through the backlog that, the last several months of shutdowns are inevitably going to cause.
Tim, I want to throw it to you. What are you seeing around, how our DOB is handling permits? And then the other question I want to ask you is, how are you doing inspections? Do you have a virtual inspection protocol that you're developing, or how are you managing or navigating this crazy time?
Yeah, sure. Well, to the first point, the DOB inspections don't really coincide too closely with what I'm doing. Sometimes there is open work. If I'm doing an inspection while there is work that has not been closed out yet, I've been going in and working it as a punch list, just the same way a construction project manager would do it, but I'm doing it for the client. So there's always going to be a follow-up inspection. And that's just something I kind of do as a courtesy or work out with the client, because a lot of times we go in and we weren't expecting that the work isn't done yet. So we tally up an actual punch list. We have to come back again and hope that it's closed out on the DOB side, or whatever is going to make the transaction go through. But to the client, they want to make sure the work is being done. So I have come across that a bit. And I think, that's happening, regardless of COVID. But that's how I typically would deal with that. Now, as far as protocols, it is opening up a little bit more. This week has been, to be honest, a lot more busy than the last 2-3 weeks. It was people were calling for inspections and then backing out because they're just holding up on the deal. Because I'm guessing whether it's through the banks or they're not wanting to even go out and do the process. So what's been happening this week in a couple inspections that I've done is, one, I first sort of lay out a very proactive protocol to the clients to sort of take the burden off of them of what to expect. Like, and ask me questions. Are you going to be safe? Is this inspector going to be safe? Are we going to be in with, how many people there? So I pretty much take the ball and I say, I have a very strict protocol. If there's occupancy at the residence, they obviously can't be there. Where do they go if they're stepping out? They have rights. People are potentially coming into their home. I personally haven't done one yet where there was occupants, thankfully, but I presume that will be happening. So I'm sort of working with the agents to best overcome that. And I have a few ideas where if you're coming into their home, they want to know that if it's, just an inspector and we can work that out and we do a virtual inspection with the client, the buyer, that the homeowner that's there feels comfortable with someone coming in. So whether it's that situation or it's me going into an empty house, which I have done a couple, I stay up front, and this is what I'm doing is I have a N95 mask, I wear nitrile gloves, I wear polypropylene shoe guards, I come in with a can of aerosol disinfectant, and I don't alter my inspection. So a little bit different from maybe how an appraisal would go. I still have to provide a valuable service to a buyer who has the same amount of money on the line. They want to know that this process is still affording them the decision-making tools to go through a closing, that what they're buying is what they see and that there's not hidden defects or anything like that. So I'm still trying to really show that I'm doing a very quality inspection for them, and I'm not sort of running through scared of, what I might come across. I'm just trying to be as honest with them and show them that I'm taking the necessary precautions as far as things that I'm coming into contact with. If I'm touching something, I'm spraying it first for my own protection, and then I spray it again when I leave, even though I'm wearing gloves. It seems, as I've been doing it, it seems a little weird, to be honest, but I think everyone that's there that's witnessing it, and honestly, it's only been the clients, the buyers, the selling agents have been very good about coming, opening up for us and leaving. They're not even there. So I think that makes everyone comfortable. And, I've seen it on the few that I did. So I think it's something that makes me feel good as I'm going in to an inspection, that there's just less people. And I think even the buyers that are there, they're not, sure what to expect. But I see even comments that they give me that sometimes they may be apprehensive of the types of questions they might ask me at a normal inspection, that they feel more comfortable to ask if the selling agent is not there. So there's a couple different angles that are happening because of what's going on. But I think the key for me is being really upfront and sort of taking charge with the information of how safe it is required to be. And I'm taking the stand of saying, hey, if you need to have more than just yourself there, we should reconsider it. There really shouldn't be more than just one purchaser there. I've had a couple calls where they wanted to bring, it was the parents and they're buying for a son, and they all wanted to see it and be there. And I said, it just doesn't make sense. There's no reason for you to be there. I'll do my job, and then I'm happy to call you on Zoom or FaceTime, and I can bring you through the critical points of whether the deficiencies are just things that as a new home buyer, for instance, might need to know. General maintenance stuff. Here's where the gas shut up. Here's where the water main is.
Something we're seeing happening on our end too, where we're limiting it. I do want to address a couple of questions that come through. Kyle, your question about how are buyers thinking about buying a property if there's need for renovations. So I can say I have one case example where a cash buyer was going to buy a condo that needed renovations immediately, and he pulled the plug and did not make the purchase. So yes, there are some situations where people are pulling the plug when they can't renovate, but most other buyers, when they're looking to make a purchase today, oftentimes are looking at 3-4 months down the road when they're closing. So I think the anticipation is that things will open up and they'll be able to renovate. I think a couple other questions. Layla, your question about, are motivated sellers looking to drop the asking price? If so, by how much? We started talking about it earlier on. There is a lot of shadow inventory. Right now, inventory is frozen. So right now, in some ways, we are able to reach out to our colleagues saying, hey, what do you have that's not on the market? We have a buyer. And what is your asking price you're thinking of? What will you settle for now? So those conversations are happening, but I don't think there's a percentage you can throw out there, because at the end of the day, it's not about, you can't say everything's dropped by 3 or 4 or 5 or 10%. It really is case by case. I'll give you a couple of examples. We had one listing we put out that had a 3% decrease. We had a couple of other listings that came out and sold at the asking prices, and we've had bidding wars as well. I think the challenge here is, again, it's a question of the property, the amount of supply and demand for it, and the competition. And the onus is on us to actually do our accurate valuation, and compared to not only last 6 months, we're now looking at where was the pricing 10 years ago, 5 years ago, to get a sense of where the pricing should be. So it is quite a bit of an art than a science. I'll give you another example. There's a property in Fort Greene that was 4.1 million asking price, a 2-family that was in contract above ask, and the deal fell through, and the sellers have now put it back on the market for 3.5. So that's a 14% decrease, but you can't really apply a percentage across. We can address it more if you have questions. Question from Chelsea is that how is it going on? How are sellers showing properties, and what kind of safety precautions they're using for motivated buyers? So we actually, Chelsea, good questions. We're actually innovating a little bit here. We had our first, believe it or not, virtual open house last Sunday, where we were inside a property and we basically gave a tour and did live Q&A. What was interesting is that we found that to be quite informative and useful, not only for us, but also for the buyers. We had 11 viewings, and we now have second viewings virtually tomorrow. Now, what's happening is, for every step of the process, there's a lot of vetting that happens before an offer gets placed. And as Helen was mentioning earlier on, for another property we're about to put up offer for a client, we needed everything to be vetted before they show the property. We have now a property where a person is making an offer, but before making the offer, they're doing the inspection first, which typically happens after the offer, because they want to know everything about the property before they make an informed offer. So I think a note to some of our clients who are looking to sell, we are starting to do virtual open houses. And we find that that's actually a useful way of filtering from the initial browsing to the actual 3 or 4 people who will actually make an offer. Then I think we will look to do a physical viewing. But right now, we have not done any physical showing of a property since shelter in place.
And I do think that there are some sellers out there and selling agents that are willing to do actual physical showings, but the process is going to be a little different in that they're going to vet thoroughly, and we would do the same thing on the sell side, vet thoroughly anybody who's interested, make sure they're financially qualified, not just having a pre-approval, but thoroughly understanding the entire financial picture before we even think about, going to somebody's private space at this time. So in the past where you might see a property first and then put in an offer. Now it's kind of like thinking about it in reverse and going to see the property almost as a confirmation more than the other way around.
And I think that's something we see staying and being the new norm for some time to come. We don't see things changing dramatically in months and weeks. We feel that we are entering a new normal. I think we have entered a point of inflection in New York real estate that we're gonna experience for at least a good 12 to 18 months. But I want to honor everyone's time. We've got another 3-4 minutes. So any other questions? Helen, do you want to open it up for everyone to just ask, since we have about 3 or 4 minutes before we close?
Sure. I mean, I can, you guys can put your questions into chat, or I can unmute everyone, but it might get a little noisy. Let's try it.
Let's get noisy for the last few minutes.
Let's get noisy. Okay.
Questions? Thanks for coming.
Yeah, so noisy, we got noisy.
You're gonna join us for dinner, family dinner.
No.
So I guess my question really was. So this is Kyle Twitchell. My question really was about since construction's shut down.
What do you mean your boss, Mom?
And we are needing the DOB to basically allow people to back up. Are people actually really looking at buying properties that need to be flipped?
I know we have a client who's planning on doing work who is already in contract. And I think we might have muted everything. Pre-corona, and they, we just negotiated stalling and closing further out as much as possible, as much as the parties were willing to tolerate, with the hopes that, at least DOB would be open by the time we close. But I mean, we do have clients who are looking at projects, and, I think at the end of the day, if the price is right and worth the investment, and you factor in an extra few months of time for the work that's required, then the deal still works. It's just at the end of the day, when you're doing a project that requires work, you just have to make sure the numbers make sense. And part of the numbers is time, and you just have to factor the time in.
And I think that is going to be the case also for multifamilies. We have a lot of investor clients who are basically out looking for deals. The rental market, we didn't talk much about, that is experiencing its own changes. I think with the rent freeze, Cuomo is going to come up with some new provisions for landlords over the next month or so. We don't know how that's going to pan out. We'd like to host this again, so we'll keep you posted, because this is an evolving thing. We're pretty much learning as we go, and we appreciate everyone's insights, because this is really the only way we can navigate this crazy market. So I want to end with some optimism. The optimism is that, hey, we're doing this for the first time. We've never done this before. So that's as a result of COVID. One silver lining. Let's hope we do this more, and let's hope we can do this physically. At some point, it will transition to actually hosting a party where we can all get loud. So there's
all bring laptops.
Yes. If there's no questions, then I guess I would say bye to everyone. Then thanks for coming. We're going to record this, and we'll send out some notes to everyone attending. And again, we're here. The whole team is here. We're working every day. So reach out to us if you have any questions.
Thank you all for
everyone.
being here.
Be safe.
Thank you.
Bye, everyone.
Bye-bye.